Hello investors, thank you for joining me. My name is Michael from Deep Value Returns on Seeking Alpha. Someone reached out to me and asked me what I thought about Scott's Miracle-Gro. So I wanted to highlight some of the opportunity here, namely investors are thinking about how the cannabis sector is going to benefit this company's exposure via its Hawthorne segment, and I'm going to talk about its valuation. So I'm just going to jump right in if you don't mind. So here's the thing. The revenue growth rates have been all over the place, and it's quite difficult to see how the company grows going forward. So there has been that kind of COVID bump, and over the past 15 months you can see that the revenue growth rates came out of Q4 2020 growing at 79% year over year, and it went up and then it came back down. So as it come around to Q4 2021, the revenue growth rate was negative 17%. So with that in mind, I think it's quite difficult for investors to kind of get particularly behind the story because it's difficult to price, So management is guiding for approximately 2% top line growth for the year ahead. And I mean, it's difficult to kind of say, okay, even with the exposure to cannabis, that this is going to be a strong growing business, okay? So one of the things I want to highlight is the management, I like listening to the earnings call, and they're quite open, and they said, okay, we've had a bit of a disruption in our business. We've benefited slightly from the COVID stay-at-home play, but we believe that the US consumer side of the business can grow at approximately 2 to 4% annually over the long term, even if in this next coming year of fiscal 22, we're kind of predicting that it's going to be slightly flattish to a small decline. But long term, we think that there is a very strong, compelling opportunity in the US consumer business, and that the Hawthorne segment is going to be growing sustainably. So they're really investing behind this Hawthorne segment that has exposure to hydroponic gardening products, which users of cannabis growers use. Now, here's fiscal 2020. So this is the prior year, and you can see that segment was up 61% year over year. So coming up against that heavy comp, for them to grow in fiscal 21 by 39%, it's really showing to investors, okay, that's really sustainably growing. So that's what management wants you to focus on, that segment here, okay? Now, as of Q4 2021, the quarter they just reported, it's kind of nearly 50-50. You can see here the Hawthorne segment accounts for nearly 50% of the total revenue. So with that in mind, it's not difficult to see how Scott's Miracle's revenues are going to be predominantly coming from the Hawthorne segment. This is going to be a cannabis story very, very soon, okay, if it's not already. Now, here's the problem. The profit margin, the free cash flow margins are quite thin. So just look into the strong year of 2020, you can see that the free cash flow margins were 12%. And if you fast forward to fiscal 21, they came in and they contracted to just 3%. So even if we look ahead over the next 12 to 18 months, it's quite difficult to see how the free cash flow margins are going to be fatter than 8%. And if we take that number, it's a hypothetical forward-looking number of 8%, we come up with approximately 400 million of free cash flow. So in that case, the stock is priced at approximately 23 times forward best case scenario. So for a business that's growing, let's say, in the best case, like in the ultimate best case, driven by this Hawthorne segment at 10% compounded annual growth rates, which is an aggressive estimate, paying right now more than 20 times free cash flow doesn't seem that attractive. I think that there are much better opportunities out there than paying this kind of valuation. I mean, this is not investment advice, and this is not the stock that I own, but I think that you can do much better than that. Even if you throw in the 300 million worth of share buybacks that they're going to deploy over the coming 12 months, I don't see that this is a particularly attractive business paying slightly more than 9 billion market cap. So if you want to find out what kind of stocks I'm particularly interested in, don't forget to check out my marketplace. It's called Deep Value Returns. I help you become a better investor. Check out what other people said, check out my reviews, start your due diligence there. Okay, thank you for listening. Bye.